Yeah,
Let's
so
see what
figure it
my
out.
options are.
So you haven't seen it, but I saw it. So I made my pick already. And I like to announce my pick right now.
Are you just jumping into it? There's no introduction, nothing?
No, this is today's cold open's a special one, buddy. And it starts with a gift from me to you
What
because
is going on here?
I'm going with
Why?
McDonald's for the
Hold
win.
on, I'm very confused here. What is going on?
McDonald's for the win. McDonald's for the win in 2025.
Why did you get him McDonald's?
This is from you?
McDonald's for the win, dude.
Oh,
That's my
jeez.
dog for the year, baby.
Oh my gosh.
Come on, man. Pick up. I got your favorites. I got your favorites. Show the show the crowd, dude. What are you
There's
enjoying
like
today?
there's like 2,000 calories here. Who's gonna eat all this?
There's way more. Has to be way more. Come on, man. I got a little daily double. That's perfect.
Thank you, sir. That's very kind of you, but
You're the big. Come on, show them the Big Mac, dude. Show them the Big Mac.
I haven't eaten a McDonald's Big Mac in years, so I might give this one away.
Gonna have lunch at McDonald's. It's gonna be perfect.
Yeah, right.
There you
I
go,
don't think
dude.
so.
That's a good cold open for the year.
Yeah, well, let's see. I could have gotten you. Let me go back to the list on what my options are.
Yeah, now you can look.
I could have
Now
gotten
the
you some
big.
toothpaste from Procter and Gamble and some mouthwash.
I know. I almost did a Coca-Cola just because I could give you a Coca-Cola, but it was like, you did it last year. It's kind of boring. I
I'd
figured this
rather
would be
just
more
pick the
fun.
S&P and not either any of the dogs of Dow because even my Coca-Cola did well, but not that well.
Yeah, no, it's a relative game. You still won. You still won. As you can tell, I did a lot of research on this pick. McDonald's, I read all the sell side reports, but I really determined that you eating McDonald's was really worth it being my pick for 2025.
Well, thank you. Can we get this going here so we can eat our food before it gets too cold?
Yeah. Let's go. That's why I was the open, dude. Come on.
Okay, I'm ready. I'm hungry.
Okay.
Now, if maybe next year if Lamborghini or Ferrari makes the list, get upgrade.
Nice one. Nice one, dude. Nice one.
Okay, so we are January 7th, 2025. We are here to recap our prediction from 2024. Brett Horowitz here with Marcos Segura in our newest Talk Your Chart episode. Marcos, we did 9 predictions in 2024 in January. We're going to go through the results of them very quickly because people don't want to see one of us brag the entire episode. So we'll just get them out of the way
Yeah.
and get to 2025 predictions.
You're a sore winner, man. You're a sore winner.
I'm not going to brag today. We're just going to go through who won. And unfortunately, one of us had to win, one of us had to lose.
Yeah, take your lap. Take it.
Okay, so Dogs of the Dow. I picked Coca-Cola, you picked Walgreens. Coca-Cola was up a modest 8.87% for 2024. Walgreens down 61.39%. Ouch.
Can't say saw that coming. That Village MD acquisition didn't work out for Boots Alliance Walgreens over here. Can't say I saw that coming. Just so the crowd knows, and we'll throw a chart up on the screen here that we just made in Excel. 61% is almost a catastrophic loss, right? People start counting it closer to 70%, but what a catastrophic loss means is good luck coming back from that. As you well know, BH, to recover from a 60% drawdown, you need to make 150%. In the
Anything's
last 10
possible,
years,
Marcos.
yeah, should I double down? I'm just wondering if I double down.
You tried that strategy last year by picking a stock that was down, and it was down when you add the 2 years together. Walgreens must be down like 90%.
Walgreens is down over 80% in the past 5 or 10 years, something like that. It's catastrophic. There's no coming back from that. Yeah.
Okay, so 1.1 for Brett, nothing for Marcos. The one that we both
And wait,
got
hold
right,
on. You're gonna review them first, and then we'll do for next year's.
yeah,
All right, cool.
the one that we both got right, which I'm proud of, was no recession was called for either one of us, and there was no recession. So thank God we were right there. Kudos to, I believe, the Fed for helping us get through that. Kudos to the consumer who's been strong, who's had a job, who's been spending money, and no recession. Great.
Yep.
Number 3, U.S. versus foreign equities. I picked U.S., you picked international, and it was U.S. dominating international this year.
Yep. Russian.
Point for Brett. 10-year Treasury end of year. I had predicted 3.7%. You predicted 3.5%. We were so close. It was 4.6%.
Yeah, that was a tight one. I'll take a quick pause here on the. Actually, you know what? I'll mention it when we do the predictions for 25. Go ahead.
So, I mean, both of us were quite wrong. We thought the interest rates would decline. Since the presidential election or just before then, rates have started to go up. What we've seen is inflation's kind of been stuck where it is. And so as a result, neither one was that close. But if we had to compare, I was at least a little bit closer.
Yes.
I mean, I can maybe see out in the distance my pick, but it's still really far away. Bitcoin. Here's where you absolutely smoked me. My prediction for end of year Bitcoin value, 46,000. You had 55,000. It came in at 93,620. Wow. I know apparently nothing about Bitcoin.
Yeah. You're gonna love my target for this year.
Okay, so point there for Marco. So that's 3-1 at this point with one tie. Headline year-on-year inflation. My prediction 2.8. Yours 2.9. It came in at 2.75.
Yep.
So very close. I guess we're going with over-under there.
Yeah, that was just trying to prices right each other. Yeah.
So point for Brett, although both are pretty close. So we were pretty spot on with that. Asset class of the year, Brett picked U.S. large cap. Marcos picked U.S. small cap. Large cap doubled up, U.S. small cap 25 to 11.5. Another point for Brett. Any comments there?
The party continues. The party continues.
Yep. S&P 500 end of the year. I went with the more optimistic 5,500. You went more pessimistic 5,390. It exceeded both of our expectations at 5,882. Great year for the S&P.
Yeah.
Point for Brett as comparison, but still
the
very
comment
off.
there is that all the big bank analysts, I think it was 97% of the folks who put out S&P targets, which is, by the way, an impossible and ridiculous thing to do, is to put out a target for the S&P 500. But people pay a lot of money to get those very long reports about them. Everyone was off, and everyone understated the performance this year. And I guess you're happy about that.
We all should be happy about that. My 401k is quite happy about that.
Yeah. Everything. My Bitcoin's very happy about that.
Yeah. Yeah. And last but not least, the unemployment rate as of 12/31. I had predicted 4.4. You were at 4.2. It ended at 4.2. You were spot on. So if the Fed needs someone to predict unemployment, they can call you.
Yeah, that's I'm gonna say of all the predictions, I'm the only one who had it right, like actually right. So as far as that metric goes, Marcos 1, Brett 0, but it's fine.
That's extra points for that one. The points that I see was 6-2 with one tie. That's what I see. That's what the people see.
It was 6-2. Yeah, I think I didn't do the homework this year. We probably want to mix in some other new predictions to keep it interesting. But for these that we have, 6-2. I congratulate you on your victory. A meal. I bought you a meal to announce my McDonald's pick for the dog of the Dow for 2025, but also to properly reward you for your victory in 2024.
Thank you. I appreciate that. I humbly will accept it because half my picks were so far away, so far off. They only won because yours were worse.
Yeah, this is fun. So before we get into 25, we'll just say the quiet thing out loud, because it can be quiet because everyone should know this. Brett and Marcos do this for fun. We do not do this because there's any power in this prediction. I've said it before, and I think you'd probably agree. It's better to have properly set expectations than to try to focus on properly set predictions. So expectations are more important and more meaningful than predictions. Predictions are fun. It gives us the content that we need, along with some McDonald's every now and then.
Well, yeah, when clients say to us, what do you see? I mean, we get it all the time. What is your prediction about 2025? What is your prediction on this versus that? The reality is we can see what's happening today, just like everybody else can see what's happening today, but it doesn't give us no predictive ability to see what's going to happen in the future. So
Yeah,
having fun with it, but I'm putting no money on any of these bets.
No, thank the good Lord that I did not invest my kids 529 in Walgreens. That would have been rough. So BH, everyone knows my dog. I'm going with McDonald's. You have the list in front of you. Who are you thinking? And are you writing these down?
Yeah, so for the viewer out there, we've got a number of options from Verizon to Chevron to Amgen, J&J, Merck, Coke, IBM, Cisco, McDonald's, and Procter and Gamble. I picked Cisco in the past. I picked Coca-Cola in the past. I will not pick those again. I am going to go with, whew, I don't like a lot of these names.
All
I'm
right,
going
I
to go
took the
with
good one.
Procter and Gamble.
P&G, Gillette, the best a
Yeah,
man
they
can get.
they just seem to make everything these days. Everything that we use, it's hard to buy something that they don't make. I don't love picking a pharmaceutical company and have to put all my bets on that they find the newest cancer this or something like that. So I'm going to go with something that is a staple in all our lives.
Yeah. Let's see. I don't think there's anything fun. Supply chain stuff. Some some green friendly detergent. That's what you're looking for to hit in 2025. Oof. It's difficult to imagine anything stopping Procter and Gamble from paying dividends for the 135th consecutive year, for growing them for a 69th year in a row. Dividend payers, baby.
That's the company making some serious money right there.
Yeah, I know. All right, good pick. I got McDonald's, you got Procter and Gamble. May the odds be ever in your favor. Recession,
You want me to go first?
please.
I mean, the easy one is to say no. So would I like to say yes? Do I think there's a chance we could have yes? Do we think that the president could do something that causes a recession or that this bull market runs long in the tooth? Yes, but I'm going to just have to keep the easy answer and go with no. As much as I would like to be devil's advocate and go with yes, I'm going with no.
Okay, so for that reason, I'll go yes. I was going to do the opposite of whatever you did. I
And
don't want to say yes because I don't see it coming. The consumer is just too darn good. Um, the consumer is just too darn good. I don't know how you get such a, even if Doge comes in and tries to do 50% of what they want to do, it's just not going to work. Um,
I mean, something could come out of left field and wipe us out into recession. A mass deportation or some more wars with another country. Like there's things out there that could happen, but
yeah,
they're
we look
low probability events.
retail sales so strong. Credit card debt as a share of disposable income, low, right? Like rising but low. Effective outstanding mortgage rates that are 4% is high. So this whole long lagged effect of interest rate hikes is just not going to impact the U.S. consumer like it could others. And that's a great thing. The share of households reporting that it's harder to obtain credit versus a year ago is down and trending down. Banks are more willing to lend, right, which is huge. HELOC balances have increased, but not by much.
People are
So I
confident.
just,
That's what this says. People are confident, right? They're spending money.
yeah,
They
but
got the job.
no. See that's where I'd say. So confidence is a contrarian indicator, right? If you have an incredibly exuberant and confident average consumer, that's not good.
But I don't
I
think
like,
I'm saying that. I don't think they're at the highest they've ever been in confidence.
yeah, that's what I'm saying. I think underneath the hood, it looks good,
Cautiously optimistic.
right? Because here's what's funny. If you ask your average American how they feel, a lot of them tell you, oh man, are we in a recession yet? Because I feel that way. Even though when you look under the hood, it's not the case at all. And a lot of times it'll depend if you're asking a Republican or Democrat, because you know how those charts always
Right,
go.
right.
Um, anyways, I'm going yes on recession here, but I don't even believe it.
Okay. That's a smart bet. US versus foreign.
What do you got? That's getting tired, but what do you think?
US. US, US, US. Until something changes to change that equation. I mean, I talked about it last episode, how many companies have been created that are worth now trillions of dollars. We're just churning them out.
They are, and we're so dominant. And when Microsoft tells me that they're going to spend $80 billion instead of $50 billion on Nvidia and Foxconn stuff, the party continues in 2025. So yeah, I'll go US. I'm going to throw in the asset class returns chart for everyone to see. And also remember, you can click on wherever the clicking happens and download the chart book that Brett and I look at before these and during these episodes.
Okay, you want to move on to asset class of the year? Is that where you're going?
Yeah, hold on, let me look at the list. No, 10-year Treasury, right?
Or you want to keep going down in the same order?
Yeah, might as well. 10-year
Okay.
Treasury. This is a big one. So let me share one thing here. So the Fed's cut interest rates 100 basis points since September, and over that same period, the 10-year is up 100 basis points. This is weird. And here we'll throw a couple of charts here to kind of show you historically that's a little bit weird. Is it fiscal worries? Is it less demand from abroad for our debt? Are the cuts not justified? The market's clearly saying something, and you have to kind of do your best to read the tea leaves, not so that you can make a prediction, but that you can set an expectation. And from my perspective, I think if we get a 10-year Treasury that's 5%, something's probably broken or is about to break. So what I'll say for my prediction on the 10-year Treasury, it's not going to get to 5% because I don't think we're going to end up in that bad of a place. I'm going to go with a 10-year Treasury of 4.6 to end the year.
So not much movement from where it is today.
Exactly. So that'll be point to point. But if you look at last year, for example, right, when we started last year, the 1 year, we were at 3.9 to start the year, and there's 4.6. And in the middle of the year, we were low as 3.6. So there was crazy volatility in rates last year. And I just think that volatility continues.
Okay, well, I'll take the exact opposite. I'm going down to 3.6. I think we're heading back there.
Okay, okay, okay.
I think there's concern right now that inflation is sticky, but as we've seen, inflation is not just moving downward every single month. There's gonna be months where it pops up a little bit, then months where it goes back down. We've seen some better data when it comes to the rents, bringing down inflation there. So I think inflation will come down. That allowed the Fed to reduce rates a little bit more. The economy will slow a little bit, which will help lower interest rates. I don't want to get down to be that low because I think where we are now, we're slightly lower, is still going to be good for the economy. It's in a good middle ground, not too high, not too low. But I think it will come down over time over the next year.
Okay. Yeah, I don't know. There's just so much growth. Like incomes are high, stock prices are high, home prices are high, debt levels are low, interest rate sensitivity is low, and banks are more willing to lend to households.
I don't think that stuff's
Significant
going to
upside.
change, but I think it might get a little bit weaker.
I just think there's the upside risk is the U.S. growth being higher, inflation being higher, and interest rates being higher.
Yeah.
And it'll be all for good reason. But I'll also go ahead and say over the next 10 years, I think we get a 5% real GDP growth figure.
Wow.
Maybe I'm drinking a little bit of the AI Kool-Aid, but yeah. Okay.
Okay. Moving on.
This episode sponsored by the Golden Arches.
Bitcoin. Ay, ay, ay.
Oh, please, sir, what do you think? Did you see the article I sent around yesterday? It said Bitcoin is the new S&P 500.
No.
You're gonna love that one.
I'll go with the masses, even though I don't believe this. I'll go with 200,000 for Bitcoin.
Oh my God. That's so funny.
What
That's
about
so
you?
funny.
We're at 100 now.
Yeah, I know. I was gonna say 200 just for fun. I'm gonna say 100 and I'll say 150,000.
Okay. Ridiculous numbers we're talking about.
Yeah, there's a lot of a lot of diligence in those figures.
I think that the US stock market's going to be up, but these 20% returns not going to happen again. And I think you're going to get a very low single-digit return for the S&P 500. I think world stock markets might be a little bit worse than that, even maybe even negative. And so I'm going to go with a nice 4 to 5% return on the intermediate term bond, taking the prize.
Wow. Why wouldn't you go long treasuries if you think the interest rate move is down?
Yeah, I guess I could have.
Okay.
I don't know.
That's fine. That's fine. Okay. Asset class of the year. What am I feeling? Where were REITs last year? Nice, right at the bottom. I love that. I'm gonna go, let's go large cap to just do 3 years in a row, followed by a recession in 26. There we go. Let's go large cap US.
Okay, then I can't wait to see your S&P 500 prediction. Hit me. So S&P is currently at just under 6,000. I'm letting you go first on this one.
Okay. So I'm throwing up a chart here by our friend Ryan Dietrich, and it shows us since 1950, strong returns after a 20% gain, as well as back-to-backs. So basically, we're going to get a third year of strong gains, right? So 2023 was 24%, 24 was 23%, so just at 24. So what happens in 2025? On
22%.
average, I'm sorry?
It's obvious. 22, 24, 23, 22. I see a pattern.
You noticed that, huh? You noticed that. I'm going to go 20%. So 20% higher than where we are today.
7,200 then?
Yes, please.
Or a little.
And what that will look like, it's so funny because when you get 3 years like that, that'll look like it'll be a 1 year short, but it'll be 95, 96, 97, and 98.
Oh, great. 2000 was a wonderful year.
So I'm going 20%.
I'm going to go with a 4% gain. So 6,000 with 4% gets you 6,240.
Okay.
You know what? I really would have been tying this all together if Burger King was on this list and you got me a Burger King crown to put on my head for the winner of the 2024 episode.
Don't look, it's sponsored by the Golden Arches.
They're not getting any money for you saying that 3 times in the episode.
I know, but when they reach out, Brett Horowitz, and I can slowly start making contributions to my SEP IRA for the side hustle. Come on, man.
Why don't you just put it behind you on your little board so we can see it every episode?
What's the download the McDonald's app and get 5% off merchandise.
And then make sure you brush your teeth afterwards with Procter & Gamble products.
Oh, well done.